You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, happy 2023. Hope everything concluded successfully. Had a great New Year's out there. Now we got to start thinking about the year ahead. And that means, to me, two things. Is there a way to make money this coming year? And if you can't make money, can you at least hold on to what you have? You know, it's said when you have these volatile markets where you really, the market's obviously in a bear formation, return of investment often becomes more important than return on investment. And Jerry Fetta, hey, you're an expert in this. You find Jerry at Wealth DynamX, wealth, DYNAMX.com. Hey, Jerry, simplify this for us. That's your expertise here. What is going on with the market now, investing in general, the economy, and how do we avoid the pitfalls, the minefields? How do we go to greener pastures, actually make money on our investments, try to keep up with inflation, because it looks like we're in a stagflationary environment? That's a lot of questions to ask you, but take a shot at it.
Yeah. Hey, Kerry, thanks for having me back on. You know, it's the elephant in the room. Obviously, the two big numbers that come up are the inflation number, CPI, and also interest rates, right? So we have this interesting combination of very high inflation and, in my opinion, underreported. I don't think that that's really as high as most people are experiencing on a day-to-day. I think most people are seeing a lot higher when you consider, the real things we buy with our currency on a day-to-day basis. And that's a big part of it. Like you said, that it creates an environment where for an investor, it actually tends to increase risk, because as an investor, it's very easy to look at that and say, okay, well, then I need to go earn higher returns, right? Higher returns are great, but we both know when I try and push just for higher returns, I'm increasing the risk oftentimes along with it. And so that can add in more volatility for an investor. On the flip side, we do have higher interest rates. So we're looking at housing has been coming down, stock markets have been coming down. It does make it, more costly to borrow money. So those are some of the dynamics at play. I'm a younger guy, as you know, so this is the first time for me that I've seen this in real life. I've read about it, I've studied it, I've seen throughout history. And I think a lot of people are in the same zone where they've not actually lived through a season like this. And so it's going to be interesting. And I think, like you said, to your point that we want to make money, we want to not lose it. Right. And so I think to speak to that point of not losing money, it really comes down to, for me, not investing in things that are going to be easily impacted by these interest rate environments. If I can be in non-correlating assets, I'm not big on stocks. I'm not big on things where I'm riding on appreciation. So if I can have a real solid asset that's going to pay me an income that's maybe not tied to those things, that's a great route. Right. And even if you're in stocks, that could mean you're in a company that pays a strong dividend. It could mean you're in income producing real estate. It could mean that you're investing in small business. But I think that really is the key. And I think right now, too, the big part that we should look at, too, is the entrepreneur is going to have a very fun time in this next, 12, 24, 36 months, because it doesn't take capital to produce money as an entrepreneur. And I think a lot of us need to be thinking with that. How can we produce income? And rather than trying to maybe outpace inflation with my investments, maybe I can outpace inflation with my active income, because that's a risk-free return on my time and that's a risk-free return on my skills.
Okay. I like the concept of, hey, look for your active income. But the question is, with inflation and everything, you might not be able to be putting aside as much money into your passive investing, if you will, right? So there's a balance here somewhere.
Yeah, what I look at personally is if the inflation rate, I mean, let's say it's 7 or 8%. I think it's higher, but let's call it 8 just for the sake of having a number. If inflation on average is 8, that does mean that the buying power of my dollars went down by 8. the money that I have in my savings went down by 8, and the returns I'm earning on my investments are being offset by that 8% as well. So if I'm making 12, I'm really netting 4, right? And then I've got to think about taxes as well. So really for me, what I focus on is I focus on two things here, Carrie. I'm going to look at what is the total that I need to increase my active income by. And when we have things like we've had where there's been money printing, there's been subsidy programs, there's been massive borrowing, all the way up to this point, that's what causes the inflation, right? It's just the increase of the money supply dilutes the purchasing power. That part isn't great, but the part that is the silver lining, again, for someone that can go out and earn income, is there's more money to earn. More dollars in circulation means there's more for me to go be able to get through a job, a business, marketing, sales, whatever it might be, whatever my avenue is. And so I want to increase my active income by a combination of what is inflation, and I'm going to factor in what do I need to increase my savings rate by, because I want to earn more than inflation, but I also want to save more than inflation to offset that loss in my savings. Plus, there's going to be a factor for what do I need to invest at, right? And so if I can do that through earn and save, then I can keep my investments stable in the range that they've been in and not lose. That's more of a scalable play for me. And if I can keep that going, then it kind of circles back through, and it'll take more time and more effort, but it does help me kind of beat the numbers in the current environment.
Okay. And I think that's a great point because like we know, hey, we're subject to the vicissitudes of the market when it comes to our passive income. Well, technically it's not passive as far as the government's concerned. It's actually regular income. But the point being that your investment income, it's going to go according to the cycle to some extent, unless you are the greatest investor ever and have gone negative or contrary to everything else, and then you cleaned up, and then you're not listening to this show anyway. But right, hey, so this is your first real recession / market crash or bear market that you've ever been through, and that's always the scariest. I mean, I've been through about 8 of them already in my life, and probably 4 or 5 since I've been an adult. What's your take on it? I mean, scary to you? Does it undermine your faith, your belief in the system? Tell us about that.
Yeah, totally. So I've been through some bear markets before, but this is the first time I would say I've been through what I believe to be is just a completely masked recession. 2008 happened. I was in school. I was in high school at that time. So I remember, seeing it, hearing stories, watching the news, but I didn't lose a job. I didn't have a 401k get lopped in half. I didn't see, my family lose their house. Granted, at the time I lived in Alaska as well. So that's even further isolated. We almost didn't have a 2008 in Alaska.
Yeah.
So that was a very interesting time. And so, I was a financial advisor from 2012 onward. And so I saw, bear markets and down years. And at the time, my script was as a financial advisor, buy low, don't sell, it'll come back, just wait. And that's kind of the thing most people are hearing. And that's not a game that I play anymore. It's not really in the retail financial services space that I put my investments or my clients anymore. And so for me at this point, I've been preparing, right? I've known that this is going to happen again. I'm surprised it took so long, honestly. We didn't really handle 2008. We just put some Band-Aids on, printed some money, lowered some interest rates, and hoped that everything would go away. And so since the point I was aware of that as an adult, I was like, great, at some point this will rear its head again. And so financially, I want to be prepared for when that happens. So for me, when I've done my investing up to this point, I've not been in anything that correlates with the market. As you know from our last show, I do a lot of high early cash value life insurance. It's a non-correlating asset. That's kind of where I do my saving. On the investing side, I'm really big into seller finance real estate, which again is not necessarily going to impact me. It's a rental, or it's an interest income that I get on a property that my name is on the title of. The value of it doesn't matter because my returns are tied to the note value. As long as that family can keep their payments going, I'm fine. So, for me, it's been cool having this happen because, you kind of build and waterproof things for a scenario like this. And now that it's actually occurring, I'm seeing the reward of having done that, right? And it's a lot of the stuff that we need to do during a time like this had to happen before this started. The years leading up to this, when money was cheap, things were easy, times were good. that really is where the saving and the investing wisely should have happened, so that when this kind of thing happens, we're prepared, we're ready. And there will be groups too that they're going to take advantage of this. They had cash set aside. They're going to go in with dry powder, buy things on sale. And it's great to be part of that group too, because of that work ahead of time.
All right. And I totally agree with what you're saying. Hey, the old saying in the Bible, in times of plenty, you prepare for failed crops. And in times of failure, bad times, you prepare for good times, right?
So yeah, absolutely.
All right. So life insurance is one sector. How do you feel about real estate?
I think real estate, there's a lot of different ways to get into it, right? And so the average person, probably if they're buying real estate, it's usually going to be primary residential, or it's going to be rental residential, where they're buying 1 or 2 or 3 units. Maybe they're doing a fourplex. I think that type of investment is extremely overpriced. And I don't want to say that as a blanket statement, because there are going to be pockets within the country that are cheaper, right? There's going to be different areas that are okay. But for the most part, when I look at buying rental real estate, the price is very high. Usually the net operating income and the cap rate isn't where it should be at for the numbers to make sense for me. You combine in the fact that it's more expensive to borrow money right now. I'm not going to say it's a bad deal, but it's not as good as it's been before. And I think that, the correction, I think, is very needed to bring prices in these types of assets down into a normal range. So I think real estate as its own play is great. Obviously, there's tax benefits with it, and that's a whole another ballgame, Carrie. I think a lot of people right now, they can be getting risk-free returns through tax reduction. If you're able to use the tax code, and do some solid tax planning, I think that's a great way to allocate funds, reduce taxes, get money that's not correlated to a market. And sometimes the returns on this are going to be bigger than I could get on real estate. I could save maybe 40, 50% on capital that I deploy for tax reduction, which is kind of its own internal rate of return. And also that savings is not taxable. So kind of a bunny trail, but that's another thing I look at during this time.
Right. What about on the spending side? What's your take there?
Don't just survive, thrive. The Financial Survival Network.
Torque Resources is an exploration company establishing a portfolio of premier copper-gold early-stage projects in Chile. Torque's management and technical teams have a strong track record of raising capital, discovery, and monetization of exploration successes. The company's Margarita copper-gold project is located within the prolific coastal Cordillera Belt in Chile, which hosts some of the world's largest and most profitable copper mines. The Margarita project possesses excellent discovery potential for a major copper discovery due to the strength of the alteration system, large-scale magnetic targets, and the presence of copper oxide mineralization. Drilling is anticipated to begin in Q3 of this year. Torque trades in Canada under TORQ and on the OTC under TRBMF. To learn more, go to torqueresources.com. That's torqueresources.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
I think on the spending side, the premise that I live by is earn more than you spend and always earn a lot. So if you need to clamp it down, during this time, I think that's warranted. I think that the most important thing is the income and the savings, even if the expenses do need to come down. But on the flip side of that is if I can keep my income high, it does help morale. During a tough time like this, it's nice to still be able to afford to go out with the family and do trips and do little things that keep you, just positive and keep your outlook open, rather than, everything has gone to shit and also I'm living on beans and rice for the next 2 years.
All right. So, because you always have two options. Number one, like you said, increase your active income, which you may or may not be able to do. That's raise the bridge. And the other is lower the river, cut your costs. Now, as far as increasing your active income, what are some things you would tell your audience, your members, the people you're helping to do that? How do you do it? You can't just say, go to the boss and say, inflation's really at 15%. I need a 15% raise, unless you're an indispensable employee. And then you should probably be looking for a new employer anyway, because if you're indispensable, your employer is making a big mistake and that company is at risk. But in all seriousness, how do you increase active income? Do you do a side hustle? You can't make any money on Uber and Lyft. Let's face it, there's just no money to be made. Maybe you can eke out a subsistence living there, but what else can you do? Do you rent out a room in your house? Do you finish up the garage and turn that into an apartment? How do you increase that active income, which really is real estate? But you know what I'm saying.
Yeah,
with the risk.
Yeah, very valid point. Valid point. I think for me, when I talk with clients and when I think of myself, even I usually am going to try and increase the source that I already have. Early on for me, when I started, really growing my business and growing my portfolio, I would hear things like, the average millionaire has 7 income streams. So I would think I need to go add a bunch of income streams. Really what that did is it left me distracted, dispersed, and not really doing great at any one of those single income streams, really doing mediocre or below average at all of them. So I think there's something to be said for consolidating. If I have a main income stream, I think that that's a very real conversation to start with. If I'm a W-2 employee, I think I do need to go to the boss. Being a boss myself, having employees, the wrong way to go about that conversation is, hey, inflation's 15%, I need a raise. I think the right way to go about that conversation is, hey, inflation's 15%. I realize that impacts the company. And as you know, it impacts me. And so I would like to find out, is there a way that I can help increase the revenue of the business and you would pay me for it? Whether that means sales, marketing, cutting costs, improving efficiency, whatever that might look like. Because if I can bring more value to the table and then get paid based on that value, it actually not only helps me through this time, but that's a future thing that will continue to happen. I can really grow that. So I think that that's great. If that can't happen, you kind of have to look at, do I keep this job? Do I go to another one, right? If it's a good, stable job and I'm not going to find better, then I might need to start using my nights and weekends for something that, again, I would say something I've done before. I think the wrong thing is to try and get started in a brand new thing that you've got to go learn about and build up from zero. If I can do something I've already done before successfully, I think that gives me a little bit more momentum going into it. So, and it could be any of the above. It could be fixing the garage up too. I think right now we can't be picky. We can make money doing it. Let's do it.
Hey, one thing, if you're a teacher or a public employee, really, you're not going to be able to dramatically increase your earnings. But if you add another degree, another certification, right, you get some training. If you're a teacher and you volunteer to coach a sport, you get extra money for it. There are many monetary opportunities, even in the public sector.
Absolutely, there are. And I like that you brought that up, because that is a very underpaid group of people, very high value. They don't make enough for the work they do. And so, there are ways to improve, like you said, certifications, education, a lot of, like, let's say it's a teacher, those individuals do have maybe a summer off. I've got a couple of teachers that are clients of mine in Alaska. In the summer, they do commercial fishing. They'll about double their income in that summer month period, and then go back to school and go back to their normal grind. So I think those are valid points. And really, when we work with clients, we teach this thing called the triangle of income. And so the first point of that is knowledge. The second point is value. And the third point is exchange. And so if I want to earn income, no matter what it is, it's going to be whatever the vehicle is. I've got to have knowledge in that area that sets me apart from others, which makes me then valuable. And it can't be I'm valuable to myself. I can't be like, I have a degree, therefore I think I'm worth money. It's others think I'm valuable because of what I have to bring to the table. Then there's the point of exchange, actually having that conversation, getting into communication with somebody, whoever it might be, and growing that income.
Right. So if you make $100,000 a year, which basically puts you in the high end of middle class, right? If you can devise a means of making $5,000 more per year and spending $5,000 less per year in taxes, then on your gross income, you basically went up 10%, right?
Yeah, absolutely. That's a good way of looking at it. And it reduces the effort needed.
Right. So the mountain appears when you're looking at, how am I ever going to make more money? I'm trapped. There's nothing you can do here. And you just give up. But the reality is that regardless, look, even if you run your own business, maybe it's that every coffee, $5-6 coffee in the morning, you multiply that times 12, 260 days times 6 is is $1,360. So you're already, a third of the way there at that 5,000 of cutting your expenditures, whether it's taxes or otherwise, right?
Yeah, absolutely. And I think, we can cut the expenditures, and then we can also look at, if I'm a business owner, if I have a side hustle, which of these expenditures could be tax deductible. If I'm getting that coffee, could I be meeting with someone? Could I be prospecting? Could I be marketing? And I can still have that expense and repurpose it and double it into tax savings. And that's really the sweet spot, is if it can earn me income and also reduce my taxes. That expense to me is magic. I want as many of those as I can get.
Hey, and look, it's like basically if you just treat your own personal finances like you're running a business, because we're both business owners. You're always looking for ways to cut costs, even if it's a few $100s. Like I saw on my American Express account, there's an offer for Amazon that I'm sorry, no, Adobe. So I use Adobe Audition for the podcast. So if I pay it all at once with my Amex card, I save $150. Right now, I'm paying it $22 a month. So I'm actually going to save the equivalent of $12.50. It's costing me $10 instead of 22. Doesn't sound like much, but if I keep doing that, all of a sudden the savings piles up. Hey, one thing I call our society is we're oversubscribed. And look, internet marketing is brilliant. I've done it myself. They get you to sign up for $10 and you then forget about it, right? Mm-hmm. And one day I went through it and I was saving $400 a month, and I didn't even know where that money came from, Jared. No idea. So everybody can do this. And then if you've got some money left over, life insurance, what do you do? Where do you put it?
So yeah, if I've got that 400, for me, like I like maxing out that life insurance policy. It's going to give me more safety than the bank, more growth than the bank, better protection. I can borrow against it. There's just a lot of, I would rather put it there than a savings account. I'm also a fan of physical gold and silver. It's a very seldom known fact that you can lease gold and silver out for income, and you can also borrow against it. So I like that as a long-term store of value. It can be an income source. It can also be an opportunity to leverage an arbitrage for real estate. But it's got to go to something. And I would tell people, like, if you're saving, unless you need that money quickly for a transaction, it's really not ideal to leave that in USD. It's going down in value. It's kind of like if I'm saving money, let's say I've got, that cash I've saved up from subscriptions and taxes, and I've earned some extra income. If I were to leave that in the bank this year, I lose 8% or 9% on it. That's the equivalent of having that as like a balance on a credit card of 9%. I'm paying that interest and it's being paid through inflation. It's a little bit of a different via, but it's still the same result as I have that loss. So, that really is my focus, is tangible assets. The average person, they probably will put that in their 401k or their IRA, which is totally fine if you want to do that. But the thing is I have to look at, Carrie, is that going to help me today? And if I need that money to help me today, to further reduce taxes or further increase income, or maybe reduce debt so I can save even more cash flow, it's really not a benefit to have that money locked up till I'm 60. So that's why I'm such a big proponent of using, they're called non-qualified assets. I don't really want to lock that up till I'm 60. If I can put that into a real store of value, not leave it in cash, I really don't want to speculate with it either. And that's why for me, those are such, solid and stable long-term storage vehicles for me.
All right. Well, I think we've gone over a lot here. If you want to find out more, you're going to have to go to Jerry's site, and that's Wealth, WealthDynamX, wealthdynamx.com. If you've got a question for Jerry, you can shoot me an email, kl@kerrylutz.com. And when you're at the site, financialsurvivalnetwork.com, make sure you sign up for your free newsletter. Jerry, really appreciate you coming on, giving us some common sense, easy to do things that really anybody can do this. You don't need an MBA to figure this one out. Really, you just need to take the time and look at things like everything is disposable. Every subscription can be canceled. And besides your utilities, your cell phone, even your cell phone, you can cut back stuff there. Maybe you don't need the $17 a month for insurance. All these things really can make a big impact on your bottom line. Jerry, we'll talk to you again soon. Really appreciate you coming on.
Yeah, thanks, Kerry. It's always great to be on the show.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.